Let me introduce CelcomDigi Berhad, formed in 2022 through the merger of Celcom Axiata and Digi Telecommunications. The company is headquartered in Shah Alam, Selangor and is jointly owned by Axiata Group and Telenor Group, each holding a 33.1% stake. CelcomDigi Malaysia's largest wireless carrier with 20.2 million subscribers as of Q2 2024. It offers a wide range of services including mobile plans, 4G or 5G internet and enterprise solutions. It has achieved 97% 4G LTE coverage nationwide. The company is also focused on sustainability, supporting carbon reduction, education and digital inclusion. The vision is to lead Malaysia's digital transformation with innovative and sustainable connectivity, and the mission to provide affordable telecom services and expand 5G networks. Next, we have Telekom Malaysia Berhad or TM, established in 1984 and headquartered in Kuala Lumpur. TM is fully owned by the Malaysian government and is a leader of fixed line telephony and broadband services under the unified brand. It also provides enterprise solutions like cloud services, data centers, and cybersecurity. TM plays a key role in Malaysia's 5G rollout. It is committed to sustainability, focusing on carbon reduction and digital inclusion. The vision to be a leading digital services provider empowering Malaysia's digital future. The mission is to deliver innovative services and drive digital transformation.
Current ratio. CelcomDigi Berhad shows weaker liquidity management compared to Telekom Malaysia Berhad, despite both covering RM1 in short-term debts. Telekom Malaysia's stronger liquidity ratio highlights its better short-term financial stability, crucial for attracting creditors and investors. CelcomDigi should prioritize improving liquidity to enhance financial stability. Current ratio. CelcomDigi Berhad shows weaker liquidity management compared to Telekom Malaysia Berhad, despite both covering RM1 in short-term debts. Telekom Malaysia's stronger liquidity ratio highlights its better short-term financial stability, crucial for attracting creditors and investors. CelcomDigi should prioritize improving liquidity to enhance financial stability. Days in receivable. CelcomDigi Berhad and Telekom Malaysia Berhad understand the importance of strategic changes to improve efficiency and achieve economic success. While the industry prefers faster collection periods, extended receivable cycles can strain working capital and impact financial performance. Proactive management is essential to streamline processes, reduce delays, and maintain strong financial health. Account receivable turnover. Telekom Malaysia Berhad outperforms CelcomDigi Berhad in account receivable management, showcasing greater efficiency in converting receivables to cash. Faster collection improves Telekom Malaysia cash flow and working capital, enhancing its operational and financial stability. CelcomDigi should focus on improving receivable management to remain competitive.
CelcomDigi Berhad and Telekom Malaysia differ in inventory management. CelcomDigi maintains minimal, stable inventories, focus on maintenance and service provision, ensuring efficiency. In contrast, Telekom Malaysia's largest infrastructure projects result in slower inventory turnover, reflecting the challenges of managing complex assets. CelcomDigi Berhad and Telekom Malaysia show contrasting inventory turnover strategies to their operational focus. CelcomDigi ensure quick turnover and responsiveness to market changes, and for Telekom Malaysia, with a focus on capital-intensive projects like network equipment, experience lower turnover to longer deployment timelines. This comprehension highlights the importance of aligning inventory strategies with business goals and market dynamics.
Operating return on assets. CelcomDigi Berhad is better than Telekom Malaysia in terms of efficiency in generating income from its asset for the year 2020 and 2021. The operating return on assets of Telekom Malaysia increased in 2022 better than CelcomDigi Berhad, as it reflects the ability to add value by optimizing asset use to earn a maximum return on their investment in asset to meet a changing in market conditions. Operating profit margin. CelcomDigi Berhad shows better operating profit margin for all years than Telekom Malaysia Berhad. This is because CelcomDigi Berhad was able to manage the cost of goods sold and operating expenses better than Telekom Malaysia Berhad. On the other hand, Telekom Malaysia's margin contraction suggests potential areas for improvement, particularly in cost containment and operational efficiency. Total asset turnover. CelcomDigi Berhad initially outperformed Telekom Malaysia Berhad in asset efficiency, demonstrating its strong capability to convert asset investments into revenue. Telekom Malaysia showed greater improvement in 2022 as a consistent asset management strategy. In contrast, Telekom Malaysia Berhad's steady improvement shows its increasing ability to generate more revenue from its asset base, signaling more effective resource utilization over time. Fixed asset turnover. CelcomDigi Berhad has a higher fixed asset turnover, suggesting that it is more efficient at using fixed asset to drive sales. For Telekom Malaysia, the steady increase in turnover shows that Telekom Malaysia is improving its ability to use fixed asset to generate sales. This could be due to better asset development to make more efficient use of its infrastructure.
Net profit margin, a key measure of how much profit a company earns as a percentage of its revenue. CelcomDigi Berhad demonstrated higher profitability in earlier years, showing strong cost management and operational efficiency. However, as market pressure increased, its margins declined, indicating challenge in sustaining its efficiency. On the other hand, Telekom Malaysia Berhad has shown steady improvement, which highlights its ability to refine strategies and adapt to changing conditions. The next is the return on assets, the ROA, which evaluates how effectively a company uses its assets to generate profit. CelcomDigi Berhad initially excelled in asset utilization, achieving strong profitability with fewer resources. However, as its asset base explained, its efficiency declined, highlighting difficulties in managing growth. Meanwhile, Telekom Malaysia Berhad demonstrated steady improvement over the years, reflecting discipline and proactive resources management.
The different debt ratio of CelcomDigi Berhad and Telekom Malaysia reflect distinct financial strategies. CelcomDigi higher ratios show aggressive borrowing for growth, such as network upgrades and prioritizing competitiveness. Meanwhile, Telekom Malaysia has lower and stable ratio, highlights a cautious approach and focusing on financial stability while funding infrastructure projects.
Time interest earned. CelcomDigi Berhad improved at first in handling interest payments, but then they declined, while Telekom Malaysia Berhad keep improving steadily. This show that they use different strategy to manage their debts.
Okay, next is debt to equity ratios, which measures how much a debt the company uses compared to its equity finance operations. CelcomDigi Berhad initially faced a high financial risk due to the heavy reliance on debt, but it has shown significant improvement in recent years, demonstrating better financial management and progress towards stability. Telekom Malaysia Berhad, on the other hand, consistently maintained lower and improving debt to equity ratios, showcasing disciplined financial management and positioning itself as more stable choice for investors.
CelcomDigi is high during 2020 and 2021. For Telekom, it's lower than CelcomDigi, but it has a stable return on equity. And it demonstrates consistent management of shareholder equity and steady recovery in profitability over the 3 years. Price earning ratio for CelcomDigi during 2020 is shown that investors are willing to pay for RM26.37 for each unit of the company earning, and it increased to RM29.26 during 2021. Telekom Malaysia is higher than CelcomDigi. It is RM86 during 2020. and it dropped sharply to RM20.04 during 2021. Price book ratio for CelcomDigi during 2020 is high. It is 4.3. It reflecting a strong investor confidence, but it dropped during 2021 from 4.3 to 2.5. Increased again during 2022 to 3.5. For Telekom Malaysia, it is relatively stable across the year. Value added for CelcomDigi had a strong growth from 2020 to 2021. Drop during 2022, it reflects a difficulty in sustaining growth. For Telekom, it initially declined from 2020 to 2021.
Projection for CelcomDigi Berhad. Revenue grew from 5.9 billion ringgit to 6.67 billion ringgit, driven by digital services, post-pandemic recovery and merger synergy. Net asset increased from 14.6 billion to 16.7 billion, supported by 5G investment and merger benefits. Next, liability and debt ratio. Liability rise from 6.9 billion ringgit to 10.9 billion ringgit. Debt ratio increased slightly from 41.8% to 43%, reflecting stable financial management. Return on equity, ROE declined from 40.3% to 12.9% due to high capital expenditure and competition requiring improved capital efficiency. Projection for Telekom Malaysia Berhad. Revenue rise from 10.8 billion to 12.5 billion, driven by broadband demand, enterprise services and 5G investment. Asset grew from 19.8 billion to 22.1 billion, reflecting investment in broadband and digital transformation. Next, liability and debt ratio. Liability increased from 12.7 billion to 13.8 billion, so the debt ratio edged up from 42.4% to 44%, showing stable financial management. ROE improved to 12.3% before settling at 11.9%, indicating strong profitability and the need for optimized capital use. Recommendation for the best company to choose, which is Telekom Malaysia Berhad, TM. TM is a stronger investment choice than CelcomDigi Berhad, backed by profitability, higher ROE and net profit margin ensure efficient operation. Liquidity, strong current ratio support stability in volatile markets. Debt management, lower leverage and better interest coverage ensure financial health. Efficiency, higher asset turnover driven by strategic investment. And lastly, dividends, consistent payouts and robust cash flow attract income-focused investors. While CelcomDigi faces major challenges and higher leverage, TM balanced growth and stability make it a reliable long-term investment. Recommendation for future performance. First, invest in innovation, expand 5G, IoT and cloud solutions to stay competitive in the digital market. Second, improve efficiency. Use automation, AI and predictive analytics to optimize operation and reduce costs. Third, enhance customer experience. Adopt CRM tools, AI chatbot and personalized marketing to boost retention and satisfaction. Next, reduce costs. Streamline supply chains, adopt energy efficient infrastructure and minimize reliance on external vendor. This strategy will enhance market position, profitability and shareholder value.
Summarize the financial analysis of CelcomDigi and Telekom Malaysia Berhad from 2020 to 2022. TM has shown a consistent revenue growth, financial stability and strong performance driven by its focus on digital infrastructure and innovative solutions. It maintains a healthy debt ratio and consistent dividend payouts, making it a stable choice for investors. CelcomDigi has grown in its asset base and consumer market but faces challenges such as rising liabilities and declining returns. The merger between Celcom and Digi offers growth potential but comes with integration risk. Overall, TM stands out a stronger performer with better financial stability and strategic focus. Thank you.